Good evening, everyone. So today we will be discussing the economics part. We will be starting with the economics section, question that have been asked. I would advise you, I think the discussion would be more on a logical part in terms of what are the important traps that can be that we need to discuss. So that would be the major area of discussion. Okay, so let us, without further ado, start with our questions. Okay, we would start from the next previous year, and then we go backwards. Okay, so yes, one more thing. All of you have got this handout, right? So we would be very much be interacting. It would be a two-way interaction, and the handout would certainly play an important part in the discussion. So please have this handout with you. Okay. Yes. Mm, Hello. Yeah. Fine. Okay. So let us start with the questions. Question one, it was asked just previous year. Okay. Rapid financing instrument and rapid credit facility are related to provisions of lending by which of the following? So yes, we all know that it is by IMF, but with respect to what are the important distinctions between rapid financing instrument and rapid credit facility, both are by IMF, but rapid financing institutions is mostly specifically for low earning countries with poor vulnerable countries. Plus, it is more of a short term, right? So as given in the handout, it is with respect to repayment period is with respect to 3.25 years to 5 years. Opposite to that, rapid credit facility is more of a long-term aspect, and it is both for low-income countries and middle-income countries. So that is the basic difference. Though it may not be asked directly, but certainly in elimination of any options, it can be useful, right? So please have this facts with you. So it is for low income plus middle income countries. And basically it is for BOP crisis. Now, for example, let us understand rapid financing instrument. India too faced the 1991, BOP crisis. But if a low-income country is facing this crisis, and that low-income country is not able to implement the IMF's directions, right? In that case, this is used. So this is specifically for countries which are unable to implement the diktats given by the IMF, unlike countries like India, right? If a very small country cannot really implement the harsh conditions that IMF imposes, so in that case, this is used. So this is the major distinction. So please understand that, right? Any issue? I think it's fairly easy question. So B. Okay. Question number 2, with reference to Indian economy, consider the following statements. First of all, with respect to need and reason, are any of you having any specific doubt, confusion, right? Let us just basically understand what this concept is. First of all, let us start with ER, exchange rate. When we talk about exchange rate, we specifically are talking about what is the exchange rate of our domestic currency like rupee with a particular individual foreign currency. Like when we are talking about rupee with respect to dollar individually, or we are talking about rupee with respect to, let's say, euro, or with respect to British sterling pounds, right? But if we add effective to it, let us understand a difference. If we add effective to it, now we are not talking about specific individual comparison. If we are including effective to it, we are including the average of these currencies. Getting my point? So effective, if we add to exchange rate, it means that we are comparing our domestic currency rupee with average of our deep foreign currencies, specifically our major trading partners, right? This is the difference between effective exchange rate and exchange rate. That is first thing. Secondly, when we take average of the foreign currencies of our trading partners, these average are weighted average. That means the dollar would have higher weightage because it has more trading with us. And for example, euro would have slightly less weightage. Okay, so this is weighted average that we do, and that is called effective exchange rate. Now, exchange rate and effective exchange rate, any issue? No? Now comes the nominal and real part, right? Let us go gradually. Now comes the nominal and real part. Now, if we add nominal to it, it means that we are not taking into consideration what? Inflation, right? So that is where the whole concept of need comes into picture, right? So that is one thing. And obviously, if we are considering the inflation impact, certainly that would be called REER. I think you don't need to now remember anything. It's very fairly clear. Now let us see the statement. An increase in nominal effective exchange rate indicates appreciation of rupee. Any doubt in that? Fine. Because if the exchange rate need is increasing, it means that rupee is appreciating. That with respect to dollar, we need to pay less amount of rupee because of appreciation. So that is right. Secondly, an increase in real effective exchange rate indicates an improvement in trade competitiveness. Let us understand, though it shows improvement in appreciation of rupee, but appreciation and trade competitiveness are inversely proportional, because if a currency appreciate, it may become stronger, but its trade competitiveness would be lesser. I think no doubt in that, because if the country is stronger, then the price of for example, the price of that product which is being sold outside would be increasing. So currency would be stronger, but its trade competitiveness would not be stronger. That is the reason why countries like China deliberately go for devaluation, right? So obviously this makes wrong. Now, third statement talks about an increasing trend in domestic inflation relative to inflation in other countries is likely to cause an increasing divergence between need and REER, because inflation is there. REER would consider that inflation, and there would be a divergence in that, right? Because of inflation aspect. So this is right. So 1 and 3 are correct. Okay. Yes, this is what I'm talking about. If there is an inflation, certainly there would be a divergence, okay, between need and REER. Okay, third question. With reference to Indian economy, consider the following statement. If the inflation is too high, Reserve Bank of India is likely to buy government securities. Very logical. Like if the RBI is buying government security, it means it is supplying money in the market, which is completely opposite to what is actually required. So obviously wrong. If the rupee is rapidly depreciating, okay, RBI is likely to sell dollars in the market. See, if the rupee is rapidly depreciating, it means it is surplus. It is available in surplus. So, for example, if we have rupee here, and if we have dollar here, right? It is in surplus. What is in surplus had lower value. So, what is RBI doing? What is RBI doing is RBI is selling its dollar, right, here. And in return, obviously RBI would trade dollars, no? RBI would trade dollars with rupees. So RBI would take this rupee outside. So this much of rupee would be available. So automatically the appreciation of rupee would happen. Getting my point how this works? Because dollar would not be it would be trading dollar. It would be selling dollar and buying the rupees. Okay, so this is how it works. So 2. Third statement, if interest rate in the USA or European Union were to fall, that is likely to induce RBI to buy dollars. Very simple, right? If the interest rate in USA and European Union were to fall, and it means that the relative interest rate of India would be more positive. So there would be a tendency for the investors to come in India because because the interest rate in US is not paying that much compared to India. So the tendency would be that the dollar or any other foreign currency, example dollar, would be coming to India. And if the dollar is coming to India, if that's a dollar is surplus increasing in its availability, then RBI, to stabilize the situation, would will buy dollars so that it doesn't appreciate the rupee too much. Getting my point, right? So 3 is correct. Last question. Can we discuss it after the class, right? Because third statement, right? Okay. What I'm saying is, if interest rate in USA and European Union were to fall, let us understand this by very simply. US Federal Reserve, right? If it reduces its interest rate that it is providing to government securities of US, if it is reducing that interest rate, right, it means that the incentive for the investors to invest in the US securities would be lesser, right? Then where would that investor go? Investor has to invest now. That would go into the India, for example. So what would happen? The surplus dollar would come to India. Now RBI is having the situation that the surplus dollar is coming into India. What should I do? I only would the RBI would naturally would buy the dollar so that it doesn't appreciate the money, the rupee too much, right? So it is exactly opposite of what happens when US Federal Reserve increases the interest rate. But it increases the interest rate, the investors would go out of India. If, for example, foreign institutional investors, we would discuss this question afterward, this concept, they would go out of India, and exactly opposite is what happening here, right? So getting my point? When we talk about interest rate, when we talk about interest rate in terms of monetary policy, it is basically with respect to RBI, right? Don't confuse in terms of individual interest rate, your interest rate that you are, that is not how it works. It is basically providing interest rate is with respect to government securities, nothing else. Only in general, when we're talking about this concept, we only discuss and first take into consideration the government securities. That is, if the RBI increases the interest rate, it means that the interest rate on government securities have increased, not with respect to the loan that we are taking. Don't confuse that, because that comes afterwards, right? When we're talking about monetary policy, we're specifically talking about government securities, and interest rate is with respect to government securities. That's what I'm saying, na? It follows afterwards. But when we talk about what do you mean by interest rate hike? It specifically first comes with government securities. So let us not confuse what would happen, as individual borrowers. The question is very specific, interest rate, and our focus should be on, unless otherwise mentioned, focus should be on interest rate with respect to government securities. Fine. Okay, very well. Let's just go to question. Okay, this is the concept. Government securities, any issue? It is just, it's a tradable instrument. And with respect to government securities, what are the two major kinds of government securities? We have treasury bills and we have dated securities. Treasury bills, what are the three kinds of treasury bills? 364, right? And dated securities, any security that is more than 1 year, right? So that is the concept. Rupee depreciation, simple concept, nothing fancy in that. Let us move on to the question 5. Those questions which were asked, which were very current affairs based, which are not relevant now, have been skipped. Okay, which are, for example, schemes or etc., which doesn't have any relevance with respect to this year, have been skipped. The basic, otherwise all the questions have been included. See, first of all, bonds are one kind of government securities. These are not other aspects, right? Bonds are kinds of government securities, right? These are not different from government securities. Within government securities, there are many aspects. right? We have equity instrument, we have debt instruments. Bonds are debt instruments. Okay, so there is don't confuse with respect to bonds are different from government securities. RBI just works with respect to government on behalf of the government. It is government securities. RBI doesn't, it's only government securities, right? RBI doesn't have any separate security of itself, right? Fine. Yes, I'm talking about government bond. No? Are you asking in general bond or in with respect to government bond? Because when you talk about what is the difference between government securities and bonds, see, first of all, dated securities are with respect to, these are with respect to monetary policy. See, dated securities is more than 1 year. Any period more than 1 year would be included in dated securities, right? So, would be included in dated securities. See, bond again with respect to bond, there is nothing like data securities. Bond is in general a long-term aspects, right? The treasury bills are mostly other securities which are short-term. Bonds are mostly, for example, bank rate. Bank rate applies on bonds, right? Bank rate applies on bonds. Bond is, for example, a commercial bank is, for example, taking loan from the RBI. When it's taking loan, it comes under the bond aspect, bank rate aspect. But when it comes to just transaction of securities, short-term securities, then comes the repo rate aspect, right? So bonds and treasury bills like securities are different. Bond is with respect to taking loan, right? But treasury bills are not considered as loan. Getting my point? So this is the concept. Let us understand. If you have any further doubt, let us specifically discuss after the class, right? I would certainly be available. Is the pace of the class fine or is it slow or fast? Fine or how many of you think it is slow or how many of you think it is fast or adequate? Adequate, no? How many of you think it is adequate? I think fairly majority is, so I have that benefit of doubt. Okay, okay. Let us, side by side keep seeing the handouts that I have provided so that, we are in sync with the concept. Okay. With reference to Indian economy, what are the advantages of inflation indexed bonds? Right. First of all, inflation indexed bond, as the name suggests, is adjusted for inflation, right? Let us understand with respect to inflation index bond. Let us understand a commercial, a bank, or any entity which has bought governments, which has bought the government securities. Let us say 100 units. 100 units of is the cost of government security. Now let us understand what happens with respect to normal bond and with respect to inflation index bond. Let us say 10-year is the maturity period, right? I have bought this government security for 100 units, and after 10 years, right, the RBI, the government would have to pay me back. I have provided money to the RBI, and RBI has provided me the security. After 10 years, now exactly opposite would happen. RBI would provide me the money, right? Now, let us understand, for example, if the interest rate is 5%, I have provided the money, 100 units at 5%, right? And I am expecting that after 10 years, I would be getting principal, but plus I would be getting the interest rate. Now, this is normal bond. Now, please understand one thing. Is the value of 100 units today similar or lesser to the value of 100 rupees 10 years? Lesser, obviously, because the amount of thing that I can buy at 100 rupees today would certainly be much lesser than the. So do I have an incentive to buy government securities, because I am having this clear understanding that after 10 years I would be getting my interest rate. But that interest rate, what would I do of interest rate? Because the value of rupee would be decreasing. Okay, so there comes the concept of inflation index bond. In the inflation index bond, two things are there. We have principal and we have interest rate. In the inflation index bond, interest rate would remain same. It would be 5%. But this principal thing, this would be adjusted to inflation, right? So that if the inflation is, let us say, increasing at 10% every year, assume that. So next year we would have 110, right? Similarly, the principal would increase, and this interest rate would be on new principal. So at the end of 10 years, first of all, I would get higher principal, plus I would get higher total interest, despite the fact that interest rate is same, but I would get to total interest, both principal and interest I would get high. So this is the concept of inflation index bond, right? Fine. Let us see the statements now. Government can reduce the coupon rates on borrowings by the inflation index bond. Yes, coupon rate means interest rate, right? It can certainly increase or decrease that. It's a prerogative of government. So that is correct. Inflation index, IIGs provide protection to investors from uncertainty regarding inflation. It would be IIBs. It provides protection to the investors from uncertainty regarding inflation. Very simple concept, right? See, inflation either can increase or decrease, right? In that sense, it is same, right? So in coupon rate means interest rate. Yes. Yes. They, yes, yes, they can buy in inflation index bond, they can reduce or increase the coupon rate. So it's a prerogative of government. That is the idea. Factually, it is correct. Like it can increase or decrease the coupon rate, right? So zero coupon bonds. See, zero coupon bonds may no, because zero coupon bond doesn't depend upon interest rate. Zero coupon bond may you are getting the money at discount face value, discount of the face value, right? For example, I am giving you 100 zero coupon rate. To any issue with that, we would discuss it in the next question. Maybe there would be a question, but still, if you have asked, then let us discuss it here only. Okay, so there is a zero coupon bond and there is a normal bond, right? In normal bond, what would happen? Okay, 100 unit would be provided, right? For example, I have bought government securities and I have provided 100 units. Then I would get the interest rate on that, right? Let us say 7% interest rate. Okay, this is normal bond. But in zero coupon bond, interest rate is not there, right? So if rate is not there, what incentive would I have to buy the government securities? The incentive is that, for example, if 100 units is the value or face value of this thing, so the borrower would not get 100 units. It would get, let us say, 95 units. This is called discount at face value. It would get discounted amount. Borrower would want 100 units, but borrower says that I am not going to provide you interest rate. So the creditor would say, fine, if you don't want to provide the interest rate, you would not get the full money. You would get discounted money, right? Though the borrower would get 95 units, but after maturity, it would have to pay 100 units only. So there is the incentive. So this is zero coupon bond, right? It can be asked in one way or the other in exam. Like the concept has to be understood. Fine. Yes, yes. I think to best of my opinion, treasury bonds are issued at zero coupon rates. Yes, same thing, same concept, discounted par value. principal is 100 amounts, 100 units, yes. We see, borrower would have to return 100 units, but borrower would get 95 units. So you're not getting 100 units completely. You're taking loan of 100 units, but you're not getting 100 units. You're only getting 95 units because you're not paying interest. The creditor has to have some incentive. Either the creditor would get interest, or the creditor would use this, right? Otherwise, why would the creditor provide you the money, right? Not lesser. See, with respect to this type of bond, interest rate quotient does not apply even, because there is no interest rate, right? Specifically this bond, when the statement is talking in general about the bonds, not with respect to this kinds of bonds. Okay. Yes. Which question? Which question? This same question in explanation. Yes. Yes. See, when it comes to the interest rate, it is not key once government has provided some interest rate and now that is reducing it. No. So it can provide higher coupon rate or lesser coupon rate, right? That is the point. Initially, what it is providing, it can decrease the interest rate that usually it provides. That is what I'm saying, right? Yes, that is not what is meant by that. It means yeah, in general, what government is providing as interest rate, it may reduce the coupon rate. That, yeah, and that is what it means, right? So see, it's UPSC question asked in UPSC. So that is why you have to understand the phrasing of question. It has to be understood, right? You may be right, right? But this is not a coaching institution statements. So we cannot question whether the statement is phrased properly or not, right? We would have certainly some questions. Those who have appeared in previously would have gone through this experience that some question, no matter what, there is some issue with respect to phrasing. So, but we have to deal with what we have, right? That is how it is. So first is there, second is correct. The third statement talks about that interest received as well as capital gains on IIBs are not taxable. It is written in your handout that any profit would comes under capital gains, and capital gains are taxable, right? It is, I think, written in last one, yes. And other important information, it would be helpful for you. Like it is auctioned directly by RBI. Minimum and maximum amount is given. That is why I explained in terms of 10 years. It can be only be redeemed after 10 years, else penalty would be imposed. So these are the important aspects. And one important thing is it is with respect to CPI. It is adjusted with respect to CPI, right? Coupon. See, coupon bond specifically means interest rate. Coupon rate specifically means interest rate, right? So here, where it is written coupon bonds here? No. That is zero coupon bond. That is whole term is zero coupon bond. It's nothing to do with coupon rate. Entirely separate aspects, right? These are zero coupon bonds. Don't confuse that with the coupon rates. Okay, it's a completely entirely. See, with respect to zero coupon bonds, he's asking, right? Yeah. So specifically with respect to zero coupon bonds, it has nothing to do with interest rate. That is the first thing that you have to understand. Let us move forward. Fine. Yes. Yes. I think this is the formula of how we calculate it. Just replace that with CPI. You're not required to know this because it is going much beyond that. But Here, when I talked about principal is adjusted. सब देख पा रहे हैं ना? Principal is adjusted, so the principal is adjusted for inflation. Now, how it is adjusted? This is index ratios multiplied by principal, and this is what this index ratio depicts the inflation aspect. So here the CPI is on adjustable date when we are adjusting is calculated, and CPI on issue date is calculated, and then index ratio is calculated, which is multiplied by principal, and then we get the actual principal. Not needed, but formula, I thought it would be good if you have an understanding of this. Okay. Question 6. With reference to foreign-owned e-commerce firms operating in India, which of the following statements are correct? So first of all, what are the two important models with respect to e-commerce, foreign-owned e-commerce? Marketplace and inventory. What is the difference between marketplace and inventory? Just very clear difference, very simple difference. Marketplace means Amazon cannot establish its own inventory. Amazon can provide platform. This is a platform Amazon is providing. Seller is coming to sell, buyer is coming to buy. Amazon का कुछ खुद नहीं है. Inventory में Amazon itself is the seller. That is banned. For example, Walmartization आपने सुना हुआ concept. Blinkit तो इंडियन है ना, फॉरेन की बात कर रहा है, फॉरेन कंपनी की बात कर रहे हैं ना. तो Walmart जो है, that has completely captured many countries, especially in Latin America. It just came, it provides predatory pricing. It completely, eliminated these small vendors, right? So that is banned in India. Inventory-based model is banned in India. With respect to e-commerce model, let us understand important aspects which are written in handouts. So first is two important models are there, marketplace and inventory-based models, right? Yes, and last two other important points that you have to understand. In e-commerce companies, what you cannot do directly, also it should not be done indirectly. It cannot happen that Amazon has established its subsidiary and allows its subsidiary to become a seller. That also cannot happen. That is what the second last point is talking about. No related entity whatsoever should sell goods to an online seller operating on the same platform. Related entity नहीं होनी चाहिए. This is specifically for foreign e-commerce, right? We are talking about e-commerce rules 2021 specifically for foreign e-commerce. Now, with big sellers have a limit of 20% for sale on e-commerce platform. Again, you cannot have one big seller completely capturing 20% of the market. Okay, so this is wrong because of the second last statement, and this is degree to which they can own big sellers on their platform is limited. So second is right, first is wrong. Okay. Which of the following activities constitute real sector in economy? Okay. So what are the two important kinds of sectors? Real sector and non-real mean financial sector. Real sectors, what are the important real sectors? What is the basic concept of real sector? Just one thing. What goods and services is produced under real sector? That is the only thing that you need to know. Whatever, any sector which mostly includes households, businesses, and government. Those entities which are providing actual goods and services would become part of real sector. It can include agriculture, it can include mining, it can include construction, it can include manufacturing, anything. Because actual tangible goods are provided and actual services are provided, right? Financial sector is completely different from that. We would see that. So farmers harvesting their crops, actual goods is being produced, so that is correct. Textile mean manufacturing is being produced, and commercial bank lending money to trading company. Here financial aspect is there. There is no actual production of any goods and services. Okay. corporate body issuing rupee denominated bond overseas, again there is no specific production. It may indirectly lead to that, but that's not our consideration. We are only focusing on what is the exact nature of this transaction. So that would be wrong, that would be wrong. First and second is right. No, primary, secondary, tertiary services also we are taking na. We're taking goods and services. There is a very high tendency of getting confused in that, but if we stick to the basic concept and remove the noise around us, we would be able to market, because we only have to we have to be very logical in terms of what we have studied with respect to real sector and financial sector, and only apply that when we are approaching the answer, right? So here it has to be with respect to not assumption, or not how we feel about it at that particular moment, but with respect to what we have logically studied and applying that, right? See, services means everything. Whatever services is being produced, it would be part of real sector, right? Except the financial aspect, right? Like, for example, software industry is very important, very oft said service. Transport sector is a very important service, right? Communication is important part of services. So, services में जो आता है, normally we have studied services में ये सब चीजें आती हैं. Yeah. That is what I'm saying. Services for this purpose, right? Goods and services except the financial aspect. Specifically लिखा गया है कि real sector है एक और एक financial sector है. When they have, and this is not with respect to logic. It has been categorized like that. Okay, so that we have to assume. Space class का slow जा रहा है तो बता दो. Slow जा रहा है ना? So what should we do then? Doubts हम थोड़े बाद में पूछें. Because, please understand, I'm not saying कि doubt, I would be available for 1 hour, no issue with that. ठीक है, वहाँ पे जितने डाउट पूछने हैं आप पूछ सकते हैं, but we have to understand other students also, right? Because, they are, so we have to go with the majority, unfortunately, right? So let's just, speed it a little bit. Fine. With reference to expenditure made by organization or by an organization or a company, expenditure made by an organization or a company, which of these following statements are correct? So acquiring new technologies, capital expenditure, very simple. Okay, debt financing is considered capital expenditure, while equity financing is considered revenue expenditure. No, not opposite. That is a confusion, right? That is a confusion, because we assume what we have read and we apply that here, and that really, because we have to be very, very clear कि पूछा क्या है and what does that mean. आप बताइए कैपिटल एक्सपेंडिचर डिपेंड किस पे करता है कि सोर्स क्या है या फिर उसका यूज क्या है, राइट? सो इट डजंट मैटर वो कहां से आ रहा है. इट कैन बी विद रिस्पेक्ट टू डेट फाइनेंसिंग बॉन्ड के थ्रू आ रहा है, और इट कैन बी विद रिस्पेक्ट टू इक्विटी आईपीओ के थ्रू आ रहा है. एनी स्टार्टअप which is raising credit through IPO, for example, हम उसको कैसे, and that startup is using that to increase its production value. How can we say that it is revenue expenditure? So when we see such statements, see, no matter how much you have prepared, कुछ statement ऐसे होंगे, then there you have to think there and then only. These are the statements. ये कहीं ऐसा specifically लिखा नहीं होगा. No, you have to apply what you have studied. So capital expenditure का focus area क्या है? It helps in increasing the production. It helps in whether government हो या फिर private sector हो. So our assumption should not be in terms of ये डेट फाइनेंसिंग. अगर स्टेटमेंट में लिखा हुआ है ना डेट फाइनेंसिंग एंड इक्विटी फाइनेंसिंग, तो ऑटोमेटिकली वी अज्यूम दैट देयर मस्ट बी सम कांसेप्ट होगा जहां पे डेट फाइनेंसिंग और इक्विटी फाइनेंसिंग कोई कंसेप्ट हो, तभी इतना स्पेसिफिकली जाके स्टेटमेंट दिया गया है. बट डोंट गेट कंफ्यूज इन दैट. दैट इज व्हाट दे आर प्लेइंग विद योर माइंड. ठीक है, और ये अभी हो रहा है तो वहां पे तो बहुत प्रेशर होता है. Getting my point? So you have to be very, very specific कि what does capital expenditure mean, and I will be very clear with that. ठीक है ना? So that is a point. So extra information handout में लिखी हुई है, that would be really helpful. So 1. Okay. With reference to Indian economy, consider the following statements. A share of household financial savings goes towards government borrowings. First of all, household financial savings में क्या what are things that comes under household financial savings? Cash in hand is there, and then bank mein deposits are there, mutual funds are there, pension funds are there. All these are part of the household financial savings, and this comes under the goes under the public account of India, and public account of India majorly includes provident funds, right? So a share of household financial savings goes under the government borrowings, right? If that is why if savings are high, government would have more surplus to invest back, right? So that is correct. Now, dated securities, clear a concept, issued at market-related rates in auctions form a large component of internal debt. Yes. First of all, internal debt is 95% of our debt is internal debt. Within internal debt, treasury bills or dated securities, are far more larger, share, because most of the internal debt is long term, which automatically means that it is dated securities, right? So this is correct. See, I deliberately am, I'm saying again and again, major information, extra information is written in handout, right? So you can also have a look at the handouts after the class. Question 11, consider the following statement. Tight monetary policy of US Federal Reserve could lead to capital flight. हमने ये concept अभी discuss किया. Let us understand, is a US Federal Reserve which has increased recently the interest rate. If it increases the interest rate, so which government securities would be more attractive, Indian one or US one? US one. So the dollar would go out to US. That is what we have seen. Foreign institutional investors, they go out of the US, right? So automatically, tight monetary policy of US Federal Reserve means increase in interest rate would lead to capital flight, specifically with respect to developing countries. It is being mentioned, right? So that is correct. Okay, capital flight may increase the interest cost of firms with existing external commercial borrowings, right? Because capital flight means that the rupee has become weaker, right? So it is with respect to that, the external commercial, when we pay back, right? If we are paying back, we have to, the rupee would be weaker than dollar, and for every single dollar, we have to pay slightly more, right? So that is a concept. Devaluation of domestic currencies decreases the currency risk associated with ECBs. It decreases or increases? Just understand by one term, devaluation of domestic currency means weakening of domestic currency. Weakening of domestic currencies means more rupee required for $1. Automatically, it would mean that currency risk would be increased, right? So 1 and 2. What would become costlier? I see, I get your point, but when we talk about interest rate and capital flight, here we have to understand what is the context of the statement. Context of the statement is that foreign institutional investors who have invested their money in India, now, because they're hot money, we all know it's a hot money, it just can, completely take a flight quickly, right? So if they are getting more interest rate in US, because usually क्या होता है, developed countries में interest rates are deliberately low, right? If that increases the interest rate, तो incentive वहां पे ज़्यादा है rather than in India. So capital flight होगा. This you agree? So what is the doubt? With respect to statement or with respect to any overall concept? Okay, so because, yeah. Mm-hmm. Yes, but Yes, the point is, this is the point. और also, simply speaking, interest rate का मतलब government securities पे interest rate. उसमें हम बोल रहे हैं क्योंकि government securities means the gilt edge securities, very safer securities. If they were getting higher interest rate from there, certainly we would be investing more amount of there, right? So this is the concept. Okay. Yes, yes, yes. And here, when we talk about interest rate, we're talking about directly investing in government securities, right? So in that sense, also it is correct. Any doubt, any broader doubt, right? I'm completely here. You can ask after the class, right? Because we have to take care of other students also, right? So, okay, 1 and 2 is right. Consider the following statement. In India, credit rating agencies are regulated by RBI, SEBI. What are the important credit rating agencies? लिखा भी हुआ है handout में. Because I have written it because it may be asked कि I think not three, more than three, but they can be asked a question. CRISIL hai, INDRA hai, we have BRICS ratings hai. What are the other important? Because it can be asked. ICRA, ICRA hai, CARE rating hai, right? So these are the important things. And years mention hai, you never know, anything can be asked. So 2 and 3 are correct. Okay, with reference to Bank Board Bureau. Now, what it is called? Financial Services. Yes, Institution Bureau. The governor of RBI is a chairman of BBB. Is the governor? It's not. It is nominated by the central government. So automatically is wrong. I think Vinod Rai was one of the chairperson. The former CAG, right? BBB recommends for selection of heads of public sector banks. Yeah, that is right. What are the other important steps taken by, or what are the other important prerogative of BBB? It also talks about consolidation of banks, merger of banks, other aspects. Yes, other aspects are there. It helps public sector banks in developing strategies and capital raising plans. This is right. So question 4. Okay, convertible bonds. What are convertible bond? Very simply. Convertible hai and bond hai. Bond to equity. That's it, right? The bonds which can be converted to equity are called convertible bonds. अब बताइए कि this is a good advantage. So interest rate would be higher or lower. If convertible bonds हैं, then and the borrower is taking that bond, and borrower has the advantage कि if inflation कहीं बढ़ गया आगे, तो I can quickly convert it in equity. So this is a good aspect. So why would convertible bond would ask for low interest rate? It would say that this is a big advantage with respect to convertible bond. So automatically you have to pay higher interest rate, right? Because that is how it works, right? So as there is an option to exchange the bond for equity, convertible bonds pay for lower interest rate. As there is an option, as there an option to exchange the bond for equity, convertible bonds pay a lower interest rate. In terms of that, lower होगा या higher होगा? आप बताओ, why lower होगा? अच्छा, one thing is there. If it is a concept where it is okay, I get your point. Like in this case, it would lower hai. But what I just mentioned right now is that if the bond is providing, if I'm the person I'm buying the bond, right, and then the government which is giving me the bond, would it expect higher interest rate or lower interest rate? Yes, right. That is, in general, it is right. But you're getting my concept now, what I'm trying to convey, right? Equity shares, yes, it can be converted. Yes, I get your point. Like it is, first of all, we have to understand what context we are speaking in, right? When it comes to, yeah, it is the point of view that, talking about. So, for example, if I am the person who is borrowing money, right? I am the person who is borrowing money, right? In that sense, I would have to pay lesser interest rate because it is convertible to equity. So it's a point of context. In Obviously, this is, with respect to point of context, it is right when it comes to borrower's point of context, right? Because then the borrowers would have to pay lesser interest rate, right? So in that sense, it is right. But the context is important. In general, it is saying that it would have to pay lesser interest rate with respect to borrower, because borrower would have, because then it can be converted to equity also, right? So this is, in that sense, it is right, right? Okay. The option to convert to equity affords the bondholder a degree of indexation to rising consumer prices. What this means, if the price increases, it is saying that if the price increases of the bond, and please understand, this is not an inflation index bond, this is a normal bond. अगर प्राइस इन्फ्लेशन इंक्रीज हो रहा है, कंज्यूमर प्राइसेस भी इन्फ्लेशन इंक्रीज हो रहा है, तो द एडवांटेज इज कि व्हेन आई नो दैट माय रिटर्न्स वुड बी लेसर बिकॉज ऑफ द इन्फ्लेशन, आई कैन क्विकली टर्न कन्वर्ट इनटू इक्विटी. Getting my point? So this is the option that is there with equity. Normal bond में this option would not be available. In this option is available because in case of inflation, when I know that future mein the returns would be lesser, I can quickly convert it in equity and also get a share, right? So both 1 and 2 are correct. Okay, convertible bonds, as there is an option to exchange the bond for equity, convertible bonds pay a lower interest rate. In this statement, is it by default talking in terms of the borrower, right? Who asked the question? Yes. When it talking in terms of borrowers, then the borrowers would have to pay lesser interest rate because then it can be converted to equity. That is the concept. Indexation with respect to adjustment with respect to inflation, right? Okay. In India, which among the following is responsible for maintaining price stability by controlling inflation? What is the institution called? MPC, Monetary Policy Committee, right? Automatically RBI hai. What are the important aspects of Monetary Policy Committee? Let us revise it quickly. 6, 3 plus 3, casting vote. Okay. Every year, how many times it has to meet? 4 times. Quorum is 4. In how many years it has to change? 5 years. Okay. And obviously, what is the range? Okay. Okay. One more thing. Who decides the rate? मतलब who decides the central government, not the RBI? ये क्वेश्चन था, आई बिलीव कहीं ना कहीं देखा होगा आपने. So that is major confusion. थोड़ा वो ध्यान रखिएगा. RBI only gives consult, provides recommendation, but the actual government that decides that. Okay, so that can be a question. Okay. 16, non-fungible tokens. What does fungible means? Basic English word mein, what is fungible? Replaceable, right? So non-fungible tokens mean non-replaceable. Fungible tokens mean replaceable. Cryptocurrencies is a fungible because 2 bitcoins हैं. You cannot say कि this bitcoin is different from this bitcoins. जब value same है 2 bitcoins की, right? So that is fungible. It can be replaced. You can use this or this. But with respect to non-fungible tokens, it is first of all unique. It has specific ownership. There is interoperability. There is a transparency. And there is artificial scarcity. what are the examples? Artwork, for example. Yeah, digital art is there. Specific clip. We have seen on social media, Instagram. What are the important NFTs are there? That girl which is having the fire burning, the house burning with in the background, right? That became a very meme plus a very good NFT, right? So that is, सबने देखा होगा वो, and she was smiling in a very, very evil smile, right? So that became an NFT actually. So they enable that digital representation of physical assets. They're unique cryptographic tokens that exist as blockchain. Everything is fine. Unique cryptographic tokens and exist as blockchain. Okay, they can be traded or exchanged at equivalency and therefore can be used as a medium transaction of as medium of commercial transaction. Right? It's like that. Medium of commercial transaction. तो bitcoins की बात कर रहे हैं तो. This is talking about bitcoins. Non-fungible token cannot be traded in this way commercially. It's the cryptocurrency that can be traded like that. So this is wrong, and 1 and 2 are correct. Okay. It is talking about first, and also it is talking about it can be used as a medium of transaction. See, Bitcoin, a cryptocurrency, is a medium of transaction. NFT is an asset. It's like a unique asset. It is, you cannot have, anything else like that. Like if you sell something, it's very unique, that is asset. Here it is talking about it's a medium of commercial transaction. Bitcoin acts like a currency. It acts like a medium, right? So that is not what it is talking about. It in itself is an asset. Okay? Slow to nahi ja rahe, ya ja rahe hain? They enable the digital representation of physical assets. That's what I said. Art is a physical asset, right? Painting is a physical asset. Any sculpture, anything. So it provides a value to that painting, right? So for example, painting is a very good example, like in a very art form, which is in digital format, right? And then there will be a particular NFT that this is a unique, no other object like this can be sold. So that artificial scarcity is maintained. Like, let us understand, a very good art piece hai, in someone's billionaire's house, that is unique, that cannot be traded. So similar thing अगर हम digital universe में करना चाहते हैं, and we would make a digital representation of that, and we would, same thing would be, there digitally. जो values की physical assets की in real world है, in digital world also it would have same value, right? Okay, let us speed up a little bit. In India, which of the following compiles information on trade disputes, closures, retrenchment and layoffs in factories employing workers? Very clearly it is the Labor Bureau. Labor intelligence, labor research, many important information is written in the handout. You can go through that. So that is there. With respect to inflation, CPI industrial workers, CPI agriculture labor, also by Labor Bureau. Shimla and Chandigarh are the two important offices of Labor Bureau. Important information that is written in the handout, right? So, okay, question 18. A governor of Reserve Bank of India is appointed by the central government. Clear? Certain provisions in the Constitution of India, automatically it goes wrong. RBI Act. The governor of RBI draws its power from the RBI Act. 1 and 3 is correct. With reference to casual workers, contract workers में obviously difference है. Casual workers are, having no securities. They are daily wage laborers. They are not contract workers. They do not have any contract signed, right? So but according to the Provident Fund Act, these are entitled for employee provident fund coverage, similar to the permanent employees, temporary employees, contract employees. So permanent, temporary, contract, and casual workers all are allowed this, right? Okay. All casual workers are entitled for regular working hour overtime payment. Minimum Wage Act under this. Minimum wage rules under this is there. The government can, by its notification, specify that an establishment or industry shall pay wages only through its bank account. This is under Payment of Wages Act. I think 2017 there has been an amendment and it has to be paid through bank account. So 20, which among the following steps is most likely to be taken at the time of economic recession? Very commonsensical question. So which among the following steps would be taken? Cut in tax rate. Accompanied, जहाँ तक ठीक है, but accompanied by increase in interest rate. यहाँ गलत हो गया, right? Increase in expenditure on public project, very obvious. Again, the same concept. Reduction in expenditure, obviously, on public project, obviously wrong. The focus would be on increasing the expenditure, right? Focus would be on fiscal stimulus rather than, other options. Consider the following statement: other things remaining unchanged, market demand for a good might increase. Okay. So first of all, what are substitute goods? If it can be replaced, if price of one good increases, if price of tea increases, we switch to coffee, right? So it is that equation, that relationship, like tea and coffee, right? Both are competitive. Like one, if the price of one increases, the other would be, the demand for other would increase, right? So let us see the second statement, complement goods. What are complement goods? Yes, tea and sugar. Yes, I mean, which are related to each other, which are together, which are having some relationship with each other. So that is one thing. The good is an inferior good and income of consumer increases. That is a basic definition of inferior good, that if the consumer income increases, the demand would not increase. We would only eat certain amount of flour, atta, not more than that. So that is wrong. Okay, its price falls. Yeah, I mean, the question is talking about demand for good might increase, obviously, because that is right. Price of substitute, if increases, automatically the demand would increase. Price of complement increases, no, because both are, walk in the same direction. Apart from that, handout, there are other aspects also. Please look at that. So, okay. Yes, substitute complements independent goods. Supplementary goods are there. Here the concept is like supplementary goods are similar, often consumed together, but not necessary complements. That is the difference, right? When we are talking about complementary goods, these are often necessary complements, but in case of supplementary goods, these are not necessary complements. For example, bread and butter. Complementary goods in production, specifically in production, it is being said. So it would be in sense of production, flour and yeast, for example. So talk about what are given goods. Yes, like it's kind of inferior goods, right? Okay, urban cooperative banks in India consider the following statement. So let us understand this very quickly. Urban cooperative bank first has urban component and has rural component. In urban component, we have scheduled urban cooperative bank and we have non-scheduled urban cooperative bank. In rural areas, we have state cooperative bank, we have district central cooperative bank, and we have PACS, primary agriculture credit societies, right? Okay. When we have other aspect also, in rural we have, it has a scheduled Cooperative, Agriculture and Rural Development Bank. Not scheduled, State Cooperative Agriculture and Rural Development Bank plus Primary Cooperative Agriculture Rural Development Bank. Right? So, यहाँ पर what is the question? Urban cooperative banks in India consider the following statement. They're supervised and regulated by local boards set up by state governments. Yes. Specifically RBI, right? Right? NABARD, this is specifically with respect to RBI. Yes. That is what I'm saying. Na? That is what I'm saying. Immediate control is with that, but major regulation that are, is provided by RBI. To say that state governments, that would be wrong. Sorry. See, I understand, I get your point, but here the concept is supervised and regulated, right? Right, that is the point. With respect to regional rural bank, also local banks, that concept also applies with respect to your what you say registrar, right? But when it comes to supervision and regulation, specifically term mentioned hai, then it is not by the board but by the RBI. They can issue equity shares and preference shares. That is right. Quickly, what are the difference between equity shares and preference shares? Yes. In a way, equity shares means you are buying equity of a company, for example, right? And you have voting rights. Preference shares means when a company, winds up, completely closed, then assets, first claim on asset would be on of preference shares. Also, dividend जो होता है annually company का, first claim of on dividend would be of preferential share owners, but they do not own it. Ownership नहीं है वहाँ पर, ठीक है? That is the basic difference. They were brought under the purview of a Banking Regulation Act 1949 through amendment in 1966, right? So 2 and 3. Is it going slow or fast? Fine, na? Please, just please speak if you want with respect to pace. Indian government bond yields are influenced by which of the following? ये थोड़ा tricky सा concept हो जाता है. First of all, bond price and bond yield are inversely proportional. Now let us see with respect to statements. Action of United Nations Federal Reserve, right? Same वो जो concept है ना, increase in interest rate वाला, वो applies here. If the US Federal Reserve is increasing the interest rate, then it would be more attractive. Money would go to the US, right? Right? Demand of US government securities would increase. Right or wrong? Right? Demand of US government securities would increase, but the demand of Indian central government's government securities would decrease. So government securities का जब demand decrease होगा, तो price भी decrease होगा. Price decrease होगा. Let us understand this. 100 unit का price था, ठीक है? उस पे bond yield मिल रहा था after let's say 2 years 110, ठीक है? But price has reduced to 90 for example. तो relative yield तो increase हो गया ना? Relative yield would increase ना? That is the concept between price and yield, right? That is why they are inversely proportional. Now, first statement is right. The decrease in demand of Indian government securities would lead to decrease in price of those bond, and this would lead to increase in the yields. Please understand this because ये confuse बहुत. This specific concept is very confusing, especially if you have to attempt in the exam pressure in 1 minute. ठीक है? तो please इसको read again and again. That is the only advice I would give. Action of Reserve Bank of India. If Reserve Bank of India is buying government securities, if the Reserve Bank itself is buying government securities, there's confidence on government securities would increase, the demand for government securities would increase, price of government securities would increase, thus yield would decrease. Getting my point? RBI is buying government securities. Investors' confidence in government securities has increased, demand has increased, price has increased, automatically yield would decrease. I would write it down so that you know don't forget this. Like uh, government securities, the RBI is buying, thus the demand is increasing. The price of the bond would increase, तो yield would decrease. सेम कंसेप्ट है, 100 की जगह 105 हो गया, automatically relative yield would decrease. So that is a concept. Third, let us see with respect to inflation and short-term interest rate. Inflation, for example, अगर हो गया, right? In that sense, the confidence on the Indian currency would decrease. Inflation would mean that confidence on the domestic currency would decrease. Again, the same concept, demand would decrease, price would decrease, yield would increase. So, uh, I think, with respect to bond yield, it can be long term also. There is no specific thing that only short term. It's just the context is different here. Right? It is not talking about interest rate. The concept is different. It is just mentioning it. Right? So, bond yield, bond price, interest rate, inflation, all the concepts clear. Inka linkage, right? Because this may confuse you afterwards. Sorry? Sorry? See, if the R again I'm saying na, if the interest rate is increasing, right? If the interest rate is increasing, it means then that the value of the government securities would increase, right? Demand would increase because value is increasing, and automatically price would increase, yield would decrease, right? See, this is the prerogative of RBI. Yeah. Mm, See, RBI every month comes with, every quarter comes with repo rate, reverse repo rate. These are interest rates only. What is the repo rate? 6.50. What is write down? What is the repo rate is 6.50. With respect to bank rate, it is 6.75 because the bank rate is higher than repo rate. Reverse repo rate is 3.35 something, right? So these are the major, interest rates. So it is RBI that decides. Yes, yes, that is what I was searching for that. That is also 6.75. Yeah, yeah. Okay. Thank you. So 24 foreign currency convertible bonds. Okay. This is with respect to what which of the above can be included in FDI. This is included. यहाँ पे लिखा हुआ है foreign institution investment with certain conditions. Please remember that 10% threshold. Right, that if if that goes beyond 10%, automatically it would become FDI. And if unlisted company में invest हो रहा है, it automatically becomes FDI. No matter वहाँ पे 10% की limit does not apply. ठीक है? Global depository receipts in terms of it is with respect to increasing their claim in Indian company. Global depository receipt होते हैं, and other, what is the other depository receipt? American depository receipt. So both are FDI. Non-resident external deposits are in, first of all, in rupee, and they doesn't come under the definition of FDI. So this is not right. 25. The effect of devaluation of a currency is that it necessarily, okay, यहाँ पे please understand read the question very carefully. It is the last word is necessarily, right? So that is where the सबको पता है concept, यहाँ पे गड़बड़ हो सकती है, right? It improves the competitiveness of the domestic export in the foreign markets. That is the reason why devaluation happens. Increase in foreign value of domestic currency, we cannot certainly say that. Yahan pe necessarily is an important aspect. Improves the trade balance. It may happen, but when it is saying necessarily, it is completely wrong. The word comes. Because in trade balance means with respect to, for example, US trade balance to improve ho jayega, but with respect to Saudi Arabia or Iraq or UAE, we have to import oil no matter what. Wahan pe we have to pay more, na? That is what I'm saying. Import would be expensive. ठीक है, यूएस के साथ if trade surplus तो हो गया, for example, but negative impact होगा other countries के साथ. तो yeah, I mean, this is why the term is very important, right? 26, which among the following effects of creation of black money in India has been main cause of worry? Again, the term is important. Main cause of worry to the government of India. With respect to main cause of worry, single important cause of worry is loss of revenue, ठीक है, to the state exchequer due to tax evasion. 27, which among the following is likely to be most inflationary in its effects? We all know that deficit monetization is the most inflationary, thing that can happen. Zimbabwe, I believe, I have written that in handouts, right? Because see, deficit monetization, what happens? Basically, RBI is buying government securities. ठीक है? RBI is buying government securities and it is paying credit to the government. Now imagine a situation where RBI is buying government securities. Government can issue government securities, वो कितने भी issue कर सकती है. But if just imagine RBI has exhausted its rupee, for example. Now that is where the printing comes. So do not be confusing that printing is the reason. Printing is, in that situation, printing is just to help that, right? But to say that only printing automatically increases, that doesn't, because government ad hoc nahi ho raha hai. We still are, RBI still is buying government securities and paying the, increasing the credit supply. But if it exhausts, then it would print it. Okay, so that is how it is working. Getting my point? So creation of new money to finance a budget deficit. Okay, money multiplier in an economy increases with which of the following? What is money multiplier in simple terms? Money multiplier means money creating its own money. How it happens? Very simply, अगर आपके पास cash है in hand, not in bank account, it is not helping. But if the money is in, let us understand, is 100 unit of money bank account में है, bank would use it, na? Bank it would use it to provide credit. Let us say at 10%. तो 110 मिल रहा है afterwards bank को. तो 10 is the money that is created out of nowhere. Getting my point? So it is multiplication of money that is happening without any addition, without any other thing happening. Getting my point? So this only works when money is actually in bank deposits. That is the concept. That is why bank deposits, that is why these Jan Dhan Yojana, what is the importance of it? The money multiplication helps, really. So that is the reason why the government went for that. So concept to simply ये है कि money is increasing itself. Okay. Now, so I'm talking about the lending aspect, right? I understand, but this is a conceptual understanding. I'm not saying, don't take it very literally. Like, अच्छा ठीक है, deposit ही net deposit की बात करो. Now fine, right? Net deposit means deposit था 200. Net, let us assume that. So whatever that is deposit net, ठीक है. Net demand and time liabilities, whatever that is deposit, उस deposit को we are lending, and whatever जो that is we are getting 10 rupees, 10, for example this, that would be the, again, imagine that on a very large scale. So that is the concept. So it increase in the banking habit of people. That is right. With reference to Indian economy, demand pull inflation can be caused increased by which of the following? Okay, fairly simple. Expansionary policy, certainly. Monetary policy में expansionary policy, decreasing the interest in, and it would help in cheaper loans. Fiscal stimulus means increasing in expenditure, decreasing in taxation, right? This is mostly fiscal aspect, government aspect, increasing in expenditure and decreasing in tax. Inflation indexing wages. Is it causing inflation, or is it a measure of checking inflation? Because inflation index bonds on a same concept hai, right? When wages of the employees are indexed with inflation, right? So automatically every year the wage would automatically increase depending upon the increase in inflation. So that is actually a measure to check against, as a hedge against inflation, right? So, okay, high purchasing power automatically would increase the expenditure. Rising interest rate, very simple. So 1, 2, and 4. With reference to India, consider the following statements. Okay, recently ये statement, those who are following current affairs, earlier treasury bills may, because these are very highly rated government securities, gilt edge securities, so usually institutional investors were only allowed. Now, you must have read it somewhere that now retail investments, people like you and me, individual investors who have high net worth, can also invest. So that is the only concept here. Okay? So retail investors through demat account. What is dematerialized account? Is less like bank account. Here pe, instead of cash, it is holding shares, it is holding equities, etc. So this is right. Okay, negotiated dealing system order matching is a government security trading platform of the RBI. Yes, it's very simply a shift from the regular what we imagine when we talk about Wall Street, people shouting and trading with manually. But here everything is digitized. You just have, and there is no intermediary. You just can use it very simply. That is what is right. So I was reading, watching a documentary, especially in terms of Wall Street. Now it's very good linkage that now, because of such system which was applied in US much early, the increase in women brokers increased, right? The women brokers, who used to trade, who trade in government these stocks and equities, they increased because the the usual environment changed because of that. It's a very good documentary. So this is how many things are linked with many things. So because they can use their tab and easily can without any dealing manually or through phone. So 2. Okay, Central Depository Services Limited is jointly promoted by RBI and the Bombay Stock Exchange. First of all, it is first of all regulated under SEBI. Secondly, RBI has no role in it. It was started initially by Bombay Stock Exchange, promoted, but then it divested its shares to leading banks. Now, leading banks, together collectively promotes this Central Depository Services Limited. So this is wrong. Okay, and another important thing is when we talk about these complex terms, don't go beyond what is required, because see, nothing else is actually asked. What is exactly this, right? So current affairs based questions, it would be helpful if you just are having basic understanding of what is current developments. So that is fair enough. Okay. 31, lender of last resort. Central banks function as a lender of last resort usually refers to which of the following? Lending to trade industry bodies when they fail to borrow from other sources. Trade industry bodies not. Yes. Providing liquidity to banks having temporary crisis. Example बताइए. MG margin, yeah. Marginal standing facility. So that is right. Lending to government to finance budgetary deficit. No. So 32. If another global financial crisis happens in the near future, which of the following actions policies are most likely to give some immunity to India? Okay. Not depending on short-term foreign borrowings, that is fairly right. Opening up to more foreign banks, I mean, the first banks to fall are the US banks, right? Maintain full account convertibility. Again, not the Tarapur committee, not why we are not following it despite it being given so many years ago, because there is a very real prevalent threat, because government in a developing country like India is still not very strong to hedge against the international vulnerabilities, right? So maintaining full account convertibility is not. Yes. No, we only have partial account convertibility. And what is the difference between partial account convertibility and full account convertibility? Very basic difference. Uh, partial, no. I mean, partial account convertibility basically means uh, certain things can be done. And certain, for example, 2,50,000 is the limit, right? Secondly, it can be used for students who are going to abroad. For education, we can convert. For health, we can convert. For tourism, we can convert, right? So it is mostly current account aspects, right? Trading. Yes, that's what I'm saying. With respect to current account, it is for the full hai. In capital account also, partial hai. There is a limit. For example, to $250,000 is a limit, right? Especially for individuals. I think for institutions or corporates, the limit is, please see, I think 500,000 something. Please see that. So the point is, कि in partial account convertibility, trading is allowed, but full account convertibility means investment. Full on investment, like no limit to how much money can be invested in India or how much Indian money can be invested abroad. So that is a dangerous game, right? So that is why it has still not been allowed. It is being in talks. So that is only one is correct. Okay. If you draw rupees 1 lakh in cash from your demand deposit account at your bank, the immediate effect on aggregate money supply in economy will be, first of all, money supply equal to cash in hand plus bank deposits. Okay. So if you are withdrawing that money from bank deposits, it is going into cash in hands, right? So money supply would not change, because whether it is in bank or in your cash, both are included in the money supply, right? So it would leave it unchanged. Any doubt in that? Fine. Okay. Okay, gold tranche or reserve tranche position. First of all, reserve tranche and gold tranche are same thing. There is another concept, credit tranche. Let us understand very briefly. Let us start with India's quota in the IMF. SDR के term. What is the percentage के terms? What is India's quota? 2.75. Chinese का quota 6.4. US का quota 17.4%. Right? That is a quota system. Now, with respect to the SDR सबको पता है, SDR is not a currency, it's a claim on hard currencies within the IMF, right? Now, with respect to, let us understand reserve tranche and gold credit tranche. So, any country that joins IMF has to contribute some amount, right? It has to contribute some amount, and so that when it needs loan, it can use that amount. So, first of all, 100 units is the total, your total, you are a country and your quota is 100 unit, for example, right? So उसमें से 25% या 25 units would be the reserve tranche that would be in foreign currency, right? And rest 75 that you have to submit, you can submit, you can submit or pay in terms of your local currency. That is a concept. That is the concept of depositing the money into IMF. First thing. Secondly, now let us understand the situation when you have to take the loan from IMF. So when you're taking the loan, there are two conditions. See, you never know how it can be asked, right? So I'm giving you a concept so that it is hardwired in your mind, and you can play with the concept whenever it is required. So this is deposition. Now when you have to take back the loan, now you would go to the IMF and would say that I would like to have some loan. IMF would just put a condition. First, exhaust this 25%. I am giving you 20% of the loan. First, you exhaust this loan. There would be no interest rate charged on this loan. You get it, this loan, there would be no issue. You pay it back. Okay? Once that 25% is exhausted and you want more money, then IMF would say, now you would get your money from this quota, this amount. यहाँ पे issue ये है कि you have to pay back at most in 3 years, and you have to pay back with interest, right? So this is the disincentive या incentive जो भी कहिए आप, to make sure that countries are responsible in getting the loan. ठीक है? This is not required, but this is how the reserve tranche is work, and this is called reserve tranche or gold tranche, and this is called credit tranche. No interest rate here, interest rate certainly here. Okay, so this is the concept. If gold tranche have been asked, it can be asked credit tranche in one way or the other. Okay, so that is right. Okay. Which among the following can be considered as a public investment in agriculture? What is public investment again in simple terms? Which increases, which investment है, right? Public investment है. So essentially, what is the expectation? That would increase the asset productivity, right? Water, for example, with respect to irrigation, is a public investment. Subsidy on seeds, equipments is a public investment. Extension services that are provided, technological, help that is provided, that is public investment. Let us understand now. But minimum support price for agriculture produce, agar if I pay minimum support price this year, can it guarantee that next year I would not have to pay? I cannot guarantee. So it is not increasing the productivity, right? So that is same concept hai. When we discuss capital expenditure, equity se ho ya fir debt se ho, the concept is what is the intention of it, right? What is the outcome of it? So that is one thing. Now, secondly, computerization of primary agriculture credit societies, certainly it would help increase the financial inclusion aspect, right? Social capital development, again, right? Free electricity supply to farmers. Providing free electricity, I be guaranteed that next year the development would be such that I would not have to pay free electricity? It is not a public investment, right? It's a populist measure. Okay. Waiver on agriculture loan. Again, the same thing. If I provide waiver, it doesn't guarantee that I would, the situation would improve. Again, this is a populist measure. Setting up cold storage facility by the government. That is right. 2, 3, and 6. Okay. Interest coverage ratio. Basically, it means that whatever the deposit, the earnings that a firm is having, divided by the interest that a firm is paying. It is basically a means to check whether this firm has the capacity to provide interest on the loan that it is receiving. To check that capacity of a firm, we do this. Please read this. Handout. वहाँ पे specifically is very clearly mentioned. Yes. I think 35, right? Question number 35 है. Please check it. यहाँ पे थोड़ा correct कर लीजिए. It is 36 वहाँ पर. The interest coverage ratio, it is calculated by earnings, dividing the earnings before interest and taxes. It means, please read the document. वहाँ पे whatever earnings that a firm is having, right? उसमें we do not adjust this earning for interest and tax. We don't deduct this, right? Total earning की बात कर रहे हैं, divided by the interest expense, right? That would give the idea. That would give the situation. It would give the idea that the firm is able to handle the loan that we are providing. Firm would be able to provide the interest and principal back. Okay. So as mentioned there, it is an important metric that is used by investors, analysts, and lenders to assess a company's credit worthiness and financial health. That is fine. A low ICR suggests that a company may be struggling to meet its interest obligation, which could be a cause of concern, and which the financial institution would check this and before it, giving you loan. So one is right. It helps in evaluating the emerging risk of a firm that a bank is giving loan to. Fine. The higher a borrowing firm's level of interest coverage ratio, the worse is the ability to service debt. That is wrong, right? Because what is the ratio? Ratio is earning before interest and taxes divided by the interest expense. So if it is higher, it means that the earnings are higher. Automatically, it is opposite of that. So 1 and 2. 37. Which of the following policies were affecting the price of rice in India in the recent past? MSP. This is a very fairly easy question. MSP, government trading, government stockpiling, consumer subsidies, all are correct. What is government stockpiling? Very simple. With respect to storage of rice. FCI से related आप समझिए, right? Consider the following statement. The weightage of food in handout में specifically mentioned so that you revise it properly again. Weightage of consumer price index is higher, of food in CPI is higher than the wholesale price index. That is correct. What is the weightage of food? 45%, right? What is the weightage of housing? 10%, right? Footwear and clothing 6%. With respect to fuel 6%. And other than that, miscellaneous 28, 30. Yeah, okay. So, and with respect to wholesale price index, what is the primary articles का weightage कितना है? Highest weightage किसका? Manufacturing. What is the high weightage? 64%. Primary हो गया, manufacturing हो गया, and what is the other? Yes, what is that weightage? Yes, please remember that. इसको ये चीज़ ना, it can be asked in any way. It doesn't mean कि वो specific आपसे you know figure ही पूछेंगे. They can play around the information in any way. Even if you are aware about the trend, that also is beneficial. ठीक है? So WPI does not capture changes in prices of services, which CPI does. That is fine. What is, apart from CPI and WPI, what is another measurement? A measurement of inflation. GDP deflator, right? So that is third important. Okay. And we have producer price index also, right? Okay. What is the difference between GDP deflator and CPI WPI, for example? Yes, yes, yes. There is no restrictions in terms of how many goods and services are included in GDP deflator. So that is a good measure in that sense, right? यहाँ पे there are certain list of, so please have a very quick लिख लीजिए in handout in terms of giving read a comparison between GDP deflator, WPI, CPI, PPI. Very basic comparison. एक beyond it thing नहीं पूछेंगे, but you need to know this. You can obviously Google it. What is GDP deflator? GDP at, फिर से बोलिए. GDP at nominal current price divided by GDP at base price. बेस प्राइस की रियल जीडीपी और नॉर्मल जीडीपी की बात हो रही है, राइट? तो व्हाट इज द डिफरेंस बिटवीन रियल जीडीपी एंड नॉर्मल जीडीपी? मेजर डिफरेंस क्या है? इन्फ्लेशन का डिफरेंस है, एंड दैट एग्जैक्टली व्हाट दिस जीडीपी डिफरेंस इज कैप्चरिंग, राइट? एंड वहां पे क्या हो रहा है, प्लीज अंडरस्टैंड, वेरी बेसिक टर्म, वेरी बेसिक थिंग इज हैपनिंग. जीडीपी एट रियल प्राइस, मतलब एट रियल जीडीपी एंड नॉमिनल जीडीपी, वहां पे देयर इज नो डिस्टिंक्शन इन टर्म्स ऑफ सर्विसेज, इन टर्म्स ऑफ गुड्स, in terms of weightage, nothing is there. Very simply, GDP at real, GDP at nominal, तो everything is included in GDP deflator. Import भी included हो जाता है. Sorry, import नहीं होते. Sorry, वो इसमें होते हैं, इसमें नहीं हो, import नहीं होते हैं. That is a catch, right? This is one thing. So that is one thing. But the thing is, it would include everything. Okay. Yes. बेस ईयर 2012 नहीं होगा. आई मीन फाइनेंशियल ईयर की बात हो रही है, फाइनेंशियल ईयर के रेस्पेक्ट में बात हो रही है. तो इफ इट इज 2012, आई मीन इट इज 2011-12. फाइनेंशियल ईयर इज ऑलवेज द लास्ट ईयर, राइट? फाइनेंशियल ईयर इज ऑलवेज द लास्ट ईयर. ठीक है, जब भी हम या तो हम बोथ ईयर्स लिखें, यहाँ यूजुअली लिखते हैं लाइक FY and the year, right? So that is the thing. Okay. Reserve Bank of India has now adopted WPI as its, obviously wrong. Developed countries में, apart from CPI, what is the next step? PPI, right? Producer price index. Why is a better measure? Because it's very clearly talking about what production cost. It is not including anything else. After production क्या होता है वो नहीं include हो रहा है. Subsidies, taxes, it is not including. Wholesale price index में everything is included जो कि production का part नहीं है, right? So that is the reason, and we may in future go towards that. So that is there. 40. In case of cereals, pulses and oil seeds, procurement of MSP is unlimited in any state units of India. Unlimited लिखा गया है, right? Yeah, right. In case of cereals and pulses, the MSP is fixed in any state at a level to which market price will never rise. What? See, it is, though in wrong assumption we may think is right कि MSP हमेशा lower ही होगा. Right, that is not the thing. It is not that कि MSP हमेशा lower ही होगा. It can also go higher, right? 41, with reference to Indian economy, consider the following statements. Okay. Basic definition करेंगे. First of all, commercial paper और certificate deposit में क्या difference है? Corporates, financial institutions, right? That is a basic difference. Handout में very good, nicely it has been written. ठीक है? Please discount for the numbering issue in the handout, right? Okay, fine. Na? Yeah, please discount for that. Yeah. Because the handout are prepared such that you don't need this questions. It is a basic information. It would be helpful. Now, okay, commercial papers unsecured hai, short-term debt instruments hai, issued by companies, right, to finance their working capital. Again, it is issued for a period of 7 days to 1 year. Okay, that is the basic idea. Certificate of deposits again short-term hai, but issued by banks and financial institution. ये basic difference याद रखिएगा. It can be और उसमें issued for a period of 1 month to 1 year. ठीक है? That is one thing. Call money market with respect to short-term fund borrowed overnight basis पे 1 day or less. Zero coupon bond we have already discussed. So certificate of deposit, first of all, commercial paper is short-term, unsecured. What is promissory notes? As the name suggests, promissory notes. I mean, it is a borrower based, right? It's a borrowers based. Like if I am borrowing, right, I would pay you a promissory note that I would pay you the money after a certain period of time. It's a legal binding document for me, right? I am giving you the promise that लेके मैं चला नहीं जाऊंगा, I would pay you back. So that is the legal binding document that you would have as a assurance, right? That is promissory notes. It is a borrower based instrument, right? Borrower would give it. ठीक है? Getting my point now? So certificate of deposit is short term, so that is why it is wrong. Issued by Reserve Bank of India to a corporation. Again, corporation wise it is wrong. Call money is a short-term finance used for interbank transactions. Zero coupon bonds are interest-bearing short-term bonds issued by the scheduled commercial banks to corporations. Yes, again this is wrong, right? इसको तुमने discuss कर लिया है. So this. Okay. FDI in India, which one of the following is considered is its major characteristics? It is the investment through capital instruments essentially in a listed company. Essentially word है ना, so it's the phrasing of the statement that has made it wrong. Okay, it is a largely non-debt creating capital flow. It is investment which involves debt servicing. Again, there is no concept of debt here, right? It is the investment made by the foreign institutional investors in the government securities. Very obvious, right? So the idea is, please, I'm not discussing everything in a handout because otherwise it would take a lot of time. But please go through that. It is not a very fundamental document. It's a document specifically for students who have done all their things. यहाँ पे it would really help you to increase the value addition part, right? So it's kind of that document. Yes. I'm not specifically clear about, but in my opinion, it's in green field. In my opinion, please you can recheck it, right? Transferable. Yes. Yes. Can you please ask it after the class, right? We have to discuss 70 questions. Let us quickly do that first. Okay? With reference to international trade of India at present, which of the following statement are correct? international trade of India. India's merchandise exports are less than its merchandise imports. Yes, that is right. Recently, what we have reached a target of 400 billion, but abhi 443 billion hai is at currently, right? Target hai, but right now it is the situation. India's import of iron and steel chemicals, uh, India's merchandise export are less than, yeah, this is right. India's import of iron and steel, chemical, fertilizer, machinery have decreased in recent years. No, it has actually increased. India's export of services are more than its import of services. That is right. Because we are only having current account surplus in case of services, right? India suffers from an overall trade current account deficit. That is also true. And this deficit is basically on account of merchandise trade, right? Tangible mein we are having surplus, intangible mein we are having surplus, but tangible mein we are not, we are having deficit. And including both, we are having deficit. In the context of Indian economy, non-financial debt includes which of the following? Non-financial debt. Housing loans owned by households. Yes. Amount outstanding on credit cards. That is right. Treasury bills is by with respect to government. Okay. That is also right here. What is given a handout? Let us see that. In non-financial debt includes all debts owned by the household, businesses and government, excluding any debt owned by the financial institution. Pehla hi statement very clearly gives the definition of it, right? Non-financial debts specifically, don't be confused कि loan तो debt ही है. ये नहीं हो रहा यहाँ पर. Non-financial debts include debt by government, by households and by companies or businesses, right? But it would not include financial institutions. ठीक है? That is the thing. यहाँ पे treasury bills is not financial institution. It is government security. So it is government, right? Government provide कर रही है ना treasury bills. So government oriented है. So all three are correct. Again, if, it would see in terms of individual accounts. No, it is with respect to the individual. यहाँ पे क्या लिखा हुआ है कि household, businesses and governments. Don't confuse it with financial institution, right? It is specifically with it would come certainly under households, or it can also come in terms of businesses, right? Doubt? Can we discuss after the class, right? Okay, so this. Okay, trims, which of the following statement are correct? First of all, trims is specifically focusing on the trade related aspect. Like that is the handout is very perfectly given. The foreign investor, protecting that foreign investor, right? So to ensure that trade happens very smoothly, there are local content requirements related regulation hai, right? You cannot go beyond certain aspects. Technology requirement, technology transfers related there are requirements. So these are the important aspects. Export performance requirements are there. So these are the three important ways in which TRIMS works. Now let us see the statement. Quantitative restrictions on imports by foreign investors are prohibited. Right? Yes. Quantitative kaha gaya hai. For example, if a foreign investor is manufacturing in India, so there cannot be a quantitative restriction ki you can only import certain amount of quantity. Whatever capital asset requirement that is there for its production, it can import easily, right? So that is right. They apply to investment measures related to trade in both goods and services. Yahan pe it is not there. Services are not included. Wrong. They are not concerned with regulation of foreign investment. That is correct. Because यहाँ पे TRIMS is only providing measures. यहाँ पे लिखा हुआ है every, it is only providing measured principle कि this is a principle, you have to follow these principle. But actual uh, regulation is by, let's say, for under FEMA, for example, or DPIIT, for example, right? It's a government bodies that are ensuring regulation. It is only providing measures, and government is accountable to those measures, right? So see, these are the statement that, if you are not reading carefully, you can make a mistake despite knowing everything. So please, MCQs are also about, understanding how to read the statement under the context. Okay. 46, if the RBI decides to adopt an expansionist monetary policy, which of the following would it not do? It would not cut and optimize the SLR. If RBI is adopting expansionary monetary policy, certainly it would cut the SLR, right? So that is wrong. Increasing the marginal standing facility rate, that is correct, right? Cut the bank rate and repo rate, again wrong. Very simple. 47, with reference to Indian economy, after the 1991 economic liberalization, consider the following statement. Worker productivity per worker at 2004-5 prices increased in urban areas while it decreased in rural areas. The productivity increased, in all the aspects, right? The percentage share of rural areas in workforce steadily increased. Again, wrong. First of all, steadily is there. Second is the share of urban is more increasing. In rural areas, the growth in non-farm economy increased. That is right. Growth rate in rural employment decrease. Again, this is a very factual question, specifically with respect to 1991 economic liberalization. So nothing conceptual here. 3 and 4. Okay. In terms of short-term credit delivery to the agriculture sector, District Central Cooperative Bank deliver more credit in comparison to scheduled commercial bank and regional rural bank. Let us quickly understand this. First of all, state cooperative banks, under it comes the districts central cooperative banks, under it comes the PACS, right? So when it comes to district central cooperative bank, it has two options. First option is it can directly lend to farmer or any other person. Second option is refinancing. It can refinance the PACS, right? Two options are there for directly वो as a bank provide work कर सकते हैं, plus also refinancing की तरह work कर सकते हैं. So in terms of short-term credit delivery to the agriculture sector, DCCBs deliver more. यहाँ पे it is wrong because still public commercial banks are having around scheduled commercial bank plus regional rural bank are having around 75% to 80% of credit being given. Very small amount is still given by the cooperative banks. So this is wrong. One of the most important functions of DCCBs is to provide funds to primary agriculture credit societies. That is right. So 2. 49, with reference to land reforms in independent India, which among the following statement is correct? Ceiling were aimed at family holdings and not individual holdings. Both family and individual. The major aim of land reforms was to provide agriculture land to all the landless. That is the thing. So it resulted in cultivation of cash crops. Was it? Certainly not. Land reform permitted no exemptions. There are ceiling limits exemption, right? What are the ceiling limits exemptions? Plantation ke liye first one exemption was there, and what are the other exemptions? Yes, that is also there. Especially in West Bengal, there many exemptions were provided, right? Uh, so these were the exemptions, and that exemptions were the loopholes that zamindars used to bypass the land reforms. Okay, so this 50. In a given year in India, official poverty lines are higher in some states than other because, okay, poverty rates vary from states to a state. Poverty price levels vary from state to state. For example, poverty lines with respect to Mumbai and Delhi would be higher because the cost of living is higher, right? Poverty line in Kerala would be higher because basic needs is differently defined in Kerala than, let us say, Hindi belt, UP or Bihar, right? Our North Indian belt are having basic needs lesser compared, because still the roti kapda makan is the essential need of it. But in socially developed far forward states like Kerala, these have been achieved much earlier. Now other aspects are there in terms of quality of health, quality of education. So basic needs ki definition different hai, right? So price levels is one of the important aspects. Other aspects we have, but price level vary from state to state. GDP वैरीज करता है, बट उसका इम्पैक्ट ऑफिशियल पॉवर्टी लाइन पे नहीं होता है, राइट? So this is the most prominent acceptable statement. 51, coal sector was nationalized by government of India under Indira Gandhi. That is right. Now coal blocks are allocated on lottery basis. Obviously auction basis, transparent auctions are there. Captive mining concept, I recall that everyone is clear about that. Now there is no captive mining, right? Till recently, India imported coal to meet shortages of domestic supply, but now India is no. Which are the countries? Specific country कौन सी है जहाँ से we import coal? Australia, right? And why we import coal from Australia? Quality भी, it's anthracite and it's better coking coal quality is there, right? So only okay. Among the following, which one is the largest exporter of rice in the world in the last 5 years? India is certainly there, and I have mentioned that in the handouts. The trend, if you require, India, Thailand, Vietnam, Pakistan, and US, right? Asia Infrastructure Investment Bank, AIIB. First of all, AIIB has around 103 member nations, so it is correct. It is more than 80 members. We have specifically we have members. Regional members are 22 members. Non-regional are 81 members. So this is correct. India is largest shareholder in AIB. Naturally, China is the largest shareholders. It doesn't have any members from outside Asia. Obviously wrong. 54. Okay. Inter-creditor agreement signed by Indian banks. Okay. Quickly, let us understand. Inter-creditor agreement is the agreement where the major bank come together collectively. For example, if let us see one example. Let a corporate likes of Malias or Modi's, Nirav Modi's. So Modi means I'm not defaming anyone, so don't. You never know, right? So yes. So consortium, if a corporate has taken loans from 5-6 banks, let us say, right? If a corporate has taken loans from bank 1, 2, 3, 4, and 5, and that person is on a verge of default. So inter-creditor agreement, under this agreement, these banks would come together and these banks would collectively work to make sure that the assets are not, it doesn't turn into a non-NPA, right? Okay, the statement says to lessen the government of India's perennial burden of fiscal deficit and current account deficit. Yes, because यहाँ पे this intercreditor agreement would leave the government of India. It would be the consortium of these banks that would be responsible for getting out of this situation, right? And one catch is there, like if amongst these banks, if 75% of bank agree to a decision, then all of the banks would have to follow the decision, right? So that is one thing. To support the infrastructure project of central and state government, what is the question? Purpose of yes, signed by Indian banks and financial institutions recently. The purpose is certainly not perennial because the main purpose it is being asked. So to support the infrastructure project of obviously not. To act as independent regulator in case of application of loans for 50 crore threshold is there, but the aim is to aim at faster resolution of stress asset of rupees 50 crores or more which are under consortium lending. That is correct, right? So when we talk about purpose, this is an indirect benefit of what the intercreditor agreement is being said, and that exactly happens in exam. So read. Yes, see, I understand. That is what, but the point is, I'm talking about indirectly. If we say it, certainly NPA crisis would be resolved. Okay, that is what I'm saying. In the examination, there's a reason why it is given as a first option. I'm talking about the psychology of how the mind works in the examination, and that is what For example, when I read the statement, I initially thought that this is not wrong actually, right? But the point is, what is the most appropriate statement? You know my point. So this chairman of public sector bank are selected by. We all have discussed this. Now it is known as differently. World Bank's ease of doing business index. Okay, this has been written in the handout. What are the important criterias? Paying taxes, registering property, dealing with construction permit, how the issues are resolved properly, contract, etc. are included in that. Maintenance of law and order is not included in the index. Okay. 57. The economic cost of food grains in the Food Corporation of India. Okay. Okay. The it is MSP and bonus pay to the farmer plus. Okay. When the FCI is trying to procure the grains, MSP is the first step. It provides MSP to the farmer, and the farmer would get incentive to produce that crop. Once the crop is produced, it goes to APMC Mandi, right? Then starts the adding up of cost. Like it would have to pay the fees to APMC, the FCI, for example. It would have to transport that. The logistical cost would be added. It would have to store that in warehouse. That cost of electricity and other aspects would be added. So this is how it works. So it is saying that economic cost includes transportation cost only. Again, obviously wrong. This is also wrong. Procurement incidentals, that just whatever I just mentioned, and distribution cost. Once the procurement is done, FCI में store कर दिया है. Store करने के बाद PDS भी तो है, right? तो MSP से लेकर हम we have used MSP to put it in the FCI. अब वहाँ से we have to distribute also PDS के लिए, तो then it adds up another cost, right? So procurement plus distribution cost, that is right. Procurement incidentals and charges for go down. See, first of all, क्वेश्चन यूपीएससी का है तो वी कैन नॉट क्वेश्चन की ये फ्रेज ठीक नहीं है, जो है वो है, राइट? नाउ इसमें वी हैव टू यूज कि व्हाट इज द मोस्ट अप्रोप्रिएट ऑप्शन. ओके, दिस इज हाउ इट वर्क्स. What is the question? But to run the go downs, we have to, you have to give finance. Na? Go downs so बना के हमने रख दिए, but it constantly need to maintain that go downs. Electricity charges are there, right? Expansion of go downs is there, or it's a perennial issue that always go downs are lesser than what is required. तो वो एक हमेशा issue रहता है, right? So there are the charges for maintenance and running the go downs. ठीक है? See, with respect to MSP, you have understood. Apart from MSP, we also at state level, the prices are provided. Who asked the question? Right. The state level, the prices are provided. So there are two aspects to it. First of all, the central government that is providing the price, and the state government. Plus, it is for sugarcane also, right? So that is a concept. First, state provides the subsidy with the price, and then the central provides, then the state government on the top of it provides that, right? So that is how the concept works. Okay. After the class, you can explain in detail. Okay. Let us quickly move. 58. Service area approach was implemented under the purview of lead bank scheme. That is very factually correct, right? Consider the following statement. Most of India's external debt is owned by government entities. Easy. See, with respect to external debt, what are the two important components? Sovereign external debt and non-sovereign external debt. Okay? It is sovereign, it is non-sovereign. It mostly includes government, it mostly includes corporates, mostly ECBs. So most of India's external debt is owned by commercial players, not by government entities. So that is wrong, right? I think around $490 billion is by ECBs, and around $130 billion is by the government. So certainly it is having higher debt. Second question is important. All the Indian external debt is denominated in US dollars. वो तो wrong है, I know. But the point is कि when we talk about external debt, can it be denominated in Indian rupees? That is a question. Masala bonds, right? Like 55% is denominated in US dollars. 30% is denominated in Indian rupees. So don't get confused. Even if you are not aware कि external debt है तो मतलब foreign currency में ही होगा. See, external debt means the debt is provided by the foreign players. अब वो foreign player US डॉलर में प्रोवाइड कर रहा है, यूरो में प्रोवाइड कर रहा है, इंडियन रूपी में प्रोवाइड कर रहा है, it's his prerogative, right? And it would be beneficial for us कि वो जो debt है, it is coming to us in rupees, because first of all we don't have to exchange it. The cost of exchange hedging, it's all done, right? So that is a concept. The intention of asking was that external debt hai, it is denominated, it can denominate it in US dollar, in Indian rupees also, right? Indian rupees 30%, US dollar for 55%, SDR's 6% share hai. So three important aspects are there. So this 60, which of the following is not included in assets of commercial bank in India? Assets of commercial banks and assets of households are two different concepts, right? When we talk about assets of household, deposit certainly is an asset for an household, right? But जो deposit commercial bank का है, is it its own earnings? It is our money that is there, so it's kind of liability. Because the deposits, when we are having deposit, it means that we don't have to pay it to someone else. वो हमारे हैं, we are owning that. But when banks has a deposit, it means that it's our bank, it's a liability for the bank because it has to pay back right? Opposite to that, advances, investment, money at call and short term, all are assets because it would be getting returns from that, right? So this is the statement. In the context of India, Which of the following factors are contributors to reducing the risk of currency crisis? Okay. Pace is fine, na? Yeah. The foreign currency earnings of India's IT sector. Yes, it is very well right, because more dollar that is coming in, more hedging, right? More forex reserve, increasing government expenditure. Again, it is, first of all, it's not about currency risk or not. Government expenditure has nothing to do directly with respect to currency crisis. So that is there. Remittance from Indians abroad always a good thing. So 1 and 3 is this option B is correct. Which of the following is issued by registered foreign portfolio investors? As soon as you read the statement very clearly, it's about participatory note. Certificate of deposit, commercial papers, promissory notes, we have all discussed. Participatory notes means we all know, but still, like, first there is foreign investor, institutional investor, which is SEBI registered, right? It invests in Indian securities. Yeah, यहाँ पे this is another investors है या फिर black money इंडिया का लेके बैठ गए हैं. That is also a reason कि यहाँ पे some Indian only is there, but it foreign भी हो सकता है, plus Indian tax evader भी हो सकता है, right? So that person would certainly want anonymity. That person would want anonymity. It doesn't want to register with SEBI. So it would issue P notes, right? So that is the idea. So this is how it works. So in a way, it is changing the black money into white and legal money, right? So that is there. Participatory notes. Okay, India's 5 years plan, which of the following statement are correct? From second 5-year plan, there was what is the second 5-year plan called? Mahalanobis strat plan. So certainly, substitution of basic and capital goods industries. Fourth 5-year plan, 69 to 674, right? So what, and Indira Gandhi had a major role in that. What are the important things? First of all, nationalization of banks, privy purses abolition, right? So it adopted the objective of correcting the earlier trend of increased concentration of wealth and economic power. That is right. In fifth 5-year plan, for the first time, the financial sector was included as an integral part of. First of all, fifth 5-year plan was mostly about Garibi Hatao, with mostly about poverty alleviation, right? So again, that is wrong. So 1 and 2. 64. Purchasing power parity, exchange rates are calculated by comparing the price of same basket of goods and services in different countries. That is right. See, PPP based exchange rate and market exchange rate में difference क्या है? This can be a question, right? Market exchange rate, जैसे हमने अभी discuss किया, exchange rate, right? Market exchange rate में we directly are comparing Indian currency with other currencies. That is the one thing that we are doing. यहाँ पे we are not doing that. That it's in fact a good measure, much better measure than the market exchange rate. In this measure, we are comparing the price of same basket of goods and services, right? So what is the concept? McDonaldization. We we compare the McDonald burger of India with the same McDonald burger of US, because ingredients are the same, and then same entities are there. So then we check what is the price of in this burger and this burger, and on the basis of that we come at the PPP exchange rate. So it's obviously is a better measure because it clearly having some tangible goods to compare, right? So that is the right. In terms of PPP dollars, India is sixth, obviously, that is. So this 75 it's 65 is current affairs base, not required. 66, which one of the following is not most likely measure the government RBI uh, takes to stop slide of Indian rupee? Not the measure पूछा है, right? So curbing of import of non-essential goods and promoting exports, certainly it would take that measure. Encouraging the Indian borrowers to issue rupee-denominated masala bonds, correct? Easing condition relating to external commercial borrowings, that is correct. Because whatever that would bring dollar into the economy, the government would do, right? So again, the same concept, the relative, when dollar comes, right, the surplus, the availability of dollars increases. That is why the rupee value would also increase and the value of dollar would decrease. So the finally, following an expansionary monetary policy, obviously it would not do it. It would further reduce the value of rupee. Okay. 16. Yes, I mean other questions were current affairs based, not required. 69. Money multiplier is in an economy increases which among the following? We have discussed that. Global competitiveness report is published by World Economic Forum. World Competitiveness Index, IMD, right? So ये एक थोड़ा confusion हो जाता है. तो World Competitiveness Report, this, and Global Competitiveness Report, World Economic Forum, World Competitiveness Index, IMD. Okay, so that is it for today. Next class we will discuss the later questions. Fine. Thank you very much. Please read the handout properly. Just give it a read. Okay. Thank you.